Welcome back. In today's housing market update, we're going to share the latest report from Redfin, which is actually just posted today regarding home prices, home sales, inventory, and much, much more. I'm also going to share the top cities in which home prices have been increasing the most, and also areas in which new listings and new pending home sales are also increasing and decreasing the most as well. So I have a lot to share in today's video. Let's go ahead and dive right in. I don't want to waste your time. This was published on June 26, which is today at the time of filming this video. It says new listings, which is a measure of people listing their homes for sale. New listings lose steam. Pending sales, a measure of contracts being signed between buyers and sellers, offers getting accepted. Pending sales fell as home prices reach a new all-time record high. Pretty crazy, right? New listings were kind of like losing momentum, but also the same goes for pending sales, yet we have all-time record highs. So would-be sellers are pulling back as it becomes more clear the housing market is tilting in favor towards buyers in much of the country. I went over that in my previous video discussing the California market. I said there we still have a seller's market, but it's a weak seller's market in which sellers are kind of losing a competitive advantage over home buyers due to a sharp increase of inventory and also sales remaining relatively flat in California. Also, according to Redfin, there are still hundreds of thousands more sellers than buyers nationwide. But some would-be sellers are sitting on the sidelines as the market tilts more in favor of buyers. So there's a lot of reports out there, you guys probably see this and probably videos as well, that the housing market's shifting, it's losing momentum due to a sharp increase of inventory. Yet, even though we have a lot more inventory, we're not seeing a sharp increase in sales, and therefore we're kind of seeing this shift in the market in many markets across the country. What we're also seeing as well is elevated mortgage rates as well. So according to Redfin, this is from the Mortgage News Daily, they have a daily survey. They survey lenders across the country, asking them, hey, what's your best rate for someone looking to buy their first home? They're putting 20% down. They have excellent credit. What's your best rate today? They do that every single day. I am a licensed loan officer here in California, but also in Texas as well. So these are not my rates. This is not advertisement to lend. I just want to give you that disclaimer. So according to them, actually, let me just share the most recent rates because this was yesterday, June 25th. So June 26, rates were at 6.72%. That's nearly a 3-month low. On top of that, it's also lower than this time 1 year ago. 1 year ago, we were sitting at around 7.06% for an average 30-year fix. That's a decrease of 34 basis points compared to 12 months ago. As you guys can see right now at 6.72%, the lowest levels since approximately early April this year. Now zooming out, this is one of the reasons why we have this kind of like stagnation of home sales for the past really like 3 years really, but especially the past 2 years. Rates have been around 7% for quite some time. They have been going from the low 6% range to around 8% in October 2023, but it had been hovering around 7% really ever since really late 2022, which is kind of putting the brakes on people buying houses due to elevated rates, but of course, elevated prices as well. And of course, this is much different compared to 2020 and early 21, when the average 30-year fix was hovering around 3%. Now they're twice as high, more than twice as high, at just under 7%. So obviously the fluctuations in mortgage rates impacts overall home buying demand, but of course, sellers as well. So if a home seller or a homeowner has a rate at 3%, 4%, they'd be less inclined to sell their houses if rates are at 7%, right? So these elevated rates is causing demand to decrease, but also for seller activity to also wind down as well. So let's also talk about another leading indication of home buying demand, that's application numbers. So this is from the Mortgage Bankers Association, or the MBA. I used to share this article with you guys every single week, but this most recent article was posted on June 25th. It says here, let's talk about refis, then we'll talk about people applying for loans who want to actually buy a home. So the refi index, obviously the higher the index, it means there's more people who are refining or applying for a loan to refinance their mortgage. The refi index increased 3% from last week, but was 29% higher than the same week 1 year ago. Obviously, due to the fact that rates today are much lower than they were 12 months ago. So people who bought homes 12 months ago could theoretically refi today and get a lower rate. Meanwhile, the seasonally adjusted purchase index, a measure of people applying for loans to buy houses, decreased from 1 week ago, but it still was over 10% higher than the same week 1 year ago. Now, here's something really interesting as well. They also share the percent of applications, how many are actually doing refis versus purchases, right? So the refinance share of activity was at 38.4%. So about 40%, therefore 4 out of every 10 applications are actually from people looking to do a refi. And of course, 60% are looking to buy a home. Also, the adjustable rate share, these are ARMs, which means that your rate is fixed for a short period of time, let's just say 5 years. Then it becomes variable thereafter. In other words, it adjusts to current rates. That was at 6.9% of all application numbers. So just under 7% of all application numbers for refis plus purchases was due to an ARM. Back in 2008, though, that figure was around 80%. Totally different market, right? Also, I would also say this as well. Over the past probably 2 years, the range here for ARMs has been in the range of 3 to about 12%. So right now we're kind of like in the middle of that range over the past 2 years. We obviously don't want to see this number spike because an adjustable rate mortgage or an ARM is a much risky loan product compared to a 30-year fix in which your principal and interest payment is fixed for 30 years versus an ARM that could be fixed for 3, 5, or only 10 years. All right, so going back to Redfin's article, rates are down from 1 year ago. Application numbers have increased, but again, that has not translated to a big increase in sales, which I'll describe here in a little bit. Also, Redfin's Home Buyer Demand Index, which is a measure of tours and other home buying services from only Redfin agents, that was down 1% year over year. So therefore, the amount of interest from home buyers who want to buy houses and tour homes with Redfin agents is more or less flat year over year. And here's a look at that right here. In green is this year, 2025, which is more or less in line with 24, which is below there in blue. What really catches my attention regarding this is that obviously we're at a low level of activity for Redfin over the past, year and a half, right? All of last year and for much of this year as well. Comparing this to 2022, look at how much higher their interest for home buyers was, right? Especially in the first 3 months. And then once rates increased to about 5%, remember in early 22, the average 30-year fix was around 3%. And by the time we hit April, I believe it was around 4.5%, right around there, 4 to 5%. And therefore, interest from home buyers absolutely fell off a cliff. This year, it's relatively flat all year. One last lead indicator is people who are searching on Google for home for sale. That actually increased to the highest level in about 10 months. However, though, comparing to 12 months ago, is down 4%. So therefore, we're seeing rates going down, we're seeing applications going up, and overall, touring activity is somewhat mixed depending on the source you're looking at. All right, let's change gears and talk about home prices. This is for the 4 weeks ended June 22nd from Redfin. They look at more or less 400 plus US metro areas, and their data goes back to 2015. So based on the US, median sold price, it was at $400,000. This means that of all the houses that did sell for this 1 month time frame, half sold below that amount and half sold above that amount. That's the median number. That is a rise of 1.6% year over year, a new all-time record high. Having a look at Redfin's data center, you can see this right here, a sharp increase over the past week. And now we're at $400,000, an increase of 2% year over year. Compare this to the same time frame in 24, we're up by 4%. So the gains are losing momentum. Another way to share this is this right here. To start the year, we're up by 5% year over year. And then it kind of weaned off from 4 to 3 to 2. Then it bounces up here again to 2% gain year over year. So we're still up from last year, but not too much higher, and well below the rates we saw to start the year. Also, the green line below there is the same time frame in 2022. Back then, we saw a big increase up by 14%. But then look at this. Prices fell off a cliff due to rates and inventory absolutely skyrocketing, and the end of the year up by 2%. Then the next year, 23, they started in positive territory, but by the time we hit more or less in March, we had negative growth rate, and then became positive once again once we hit the spring or the summer buying season through the end of the year. Now, one of the reasons why sales are remaining still low is this right here. Your average monthly housing payment is down only $42 per month from May's all-time record high. So housing affordability is a big issue, has been a big issue for many months now. But this is one of the reasons why buyers are kind of pulling back amongst other things. You know, the Middle East conflict, worries about a recession, et cetera, et cetera. So speaking of that, let's have a look at the buy side, then we'll have a look at the supply side. So pending home sales, there was a total of just under 86,000 pending home sales. These are buyers who are in contract to buy a house right now. That's down by 2.3% year over year. So even though we have more inventory, buyer demand is actually going down. So more options is not translated to an increase in pending home sales. On top of that, even though we're seeing more application numbers, pending sales are still decreasing. So even though people are applying for loans, it's not translating to an increase in sales just yet. Now, here's something that I really want you guys to kind of take away from. I'm guessing there's probably a lot of videos online, especially YouTube, from people who saying that the housing market's going to crash. They've been making videos like this for years and years, right? So one thing that you guys should be aware of here is that even though sales, or I should say pending sales, are down year over year, we're not seeing inventory absolutely skyrocketing, at least not for the nation as a whole. Every market's different, right? Denver, parts of like Austin, Texas, parts of Florida are experiencing a huge increase of inventory. And that is areas in which they have a buyer's market in which buyers have an advantage over buyers. But right now, at least according to this report from Redfin, we're looking at new listings only increased by 2.5%. That's the smallest increase in 5 months, which is unusual because new listings tend to peak in May, and then they're still high in June. So it's pretty wild to see here that that's the smallest increase in about 5 months. So new supply in the market is basically at a 5-month low, which is causing active listings, which is a measure of the total number of homes for sale, to actually increase by 14.3%. That's the smallest increase in 15 months. So taking a step back here, what we're seeing here, right? We're seeing sales dip just a little bit, but we're seeing new supply in the market, a small gain up by 2.5%, which is causing active listings to post a very small gain, the smallest increase in about 15 months. If this was the opposite, let's just say that pending sales were down 20%, we had active listings increasing by 30% and was going higher. It was a 15-month high. I would be ringing the alarm bells, right? Because that would be a recipe for prices to decrease greatly because demand going down, but supply going straight up. And right now we're seeing demand going down just a little bit, but supply still increasing, but not skyrocketing. All right, so you guys all know I like to share multiple sources on this channel. So here's the latest report from Realtor.com, also posted on June 26. They have a different number regarding inventory numbers. So again, Redfin's at a gain of 14.3%. Again, they're not looking at the entire US, but they are looking at 400 plus US metro areas. Again, keyword metro, not outside city limits. So this report does not include all home sales, all new listings, et cetera, et cetera. So anyways, looking at Realtor.com, active inventory, which is the amount of homes for sale, rose by 27.5%. The number of homes actively for sale remains on a strong upward trajectory, now a gain of 27.5%. This represents the 85th consecutive week of annual gains of inventory. There were more than 1 million homes for sale again last week, marking the 8th consecutive week above that threshold and the highest inventory level since December of 2019. So according to Realtor.com, we're basically above any other month since since COVID hit, right? The highest level since December of 2019. Again, looking at the nation as a whole. In California, for example, we are at about a 5-year high. And of course, other states like Florida and Texas are higher than we are here in California. Anyways, while choices for buyers have expanded, overall supply remains well below pre-pandemic norms, particularly in the Midwest and the Northeast. Makes sense in the Northeast, right? They have a lack of land to build on, a lack of home building, a lack of new supply from home builders. And because of that, and of course, due to low inventory for the resale market, prices are still increasing. In stark contrast, nearly all southern metros now exceed pre-COVID-19 active inventory, fueled by faster new home construction over the past several years. So if you're a home buyer looking to buy a home in the South, for example, compared to Connecticut, for example, your experience is going to be entirely different. My advice for you guys, just because inventory increased by 27% nationwide for the average for the nation, this does not mean that's what you're experiencing in your market, right? Or an area you're looking to sell or buy. So my advice for you guys, link up with a great agent in your neck of the woods, study your stats regarding what's happening in your area, your neighborhood, because of course that could vary by the state, the city, the region, etc. All right, so going back to Redfin's report, let's also look at the 50 most populous US metros, how they fare, because there's some very big changes here. So based on home prices, those actually decrease in 12 of those metros. So out of the 50, there's only 12 in which prices are down compared to 1 year ago. And therefore, in contrast, this means that 38 metros are still up from the same time frame in 2024. The biggest increase is actually in New York, New Jersey, up by 6%. Then we have Montgomery County, Pennsylvania, up by 5.5. Miami, that's a surprise to me, up by 5.2. New York up by 4.1. And New Jersey up by 4.8%. In contrast, we have Oakland, San Diego, Atlanta, Austin, Tampa, Florida are the top 5 markets in which prices have decreased the most from 12 months ago. So let's have a look at pending sales. They don't tell us how many are down versus up. I don't know why they're doing this, but ever since really over the past 1 month, they have not shared how many are down or up for new listings or pending sales. In any case, the top 5 markets in which pending sales have increased the most is Dallas, Texas, then Cincinnati, Montgomery County, Pennsylvania, Warren, Michigan, and Virginia Beach. And here are the markets in which pending sales have decreased the most. Fort Lauderdale, Florida, down 18.6. San Jose, California, down by 18.3. Las Vegas, down by 17.7. All these markets, then we have, of course, Miami and Houston. All these markets are down by more than 12%. In contrast, new supply here in the market, they actually did mention this in their narrative above. I'll share a link in this in the video description below for this article. New listings rose in 30 of the 50 biggest metros. So most of the metros, or most of the biggest metros, still have more new listings than they did in 2024. And here are the top 5 markets that experienced the biggest increase. And here are the top 5 markets that are down the most year over year. Also, have a look at this. The month supply is at 4.1 months. That's an increase of 0.7 months from 1 year ago. 1 year ago, we're at just under 3.5 months supply. Now it's at 4.1 months, which is indicative of more or less a balanced market in the United States. Also, it's worth noting here, I really wish they would share 2019's numbers here, but it goes back to 2022. What a difference a few years makes. Right now, the month supply is at least a 3-year high right now. All right, let's also have a look at the average sale price to final list price ratio. I'll explain this. That ratio right now is at 99%, which means out of all the homes that did sell over the past 1 month, they sold for 1% below the seller's final list price. That's 99%. This is lower than the same time frame in 24, when the ratio was at 99.5, lower than 2023. Back then, the ratio was at 100%, which means that homes on average were selling for the seller's asking price. Now it's selling slightly below asking at 99%. It's also worth noting here that we are not experiencing the same market we did in 2022. Obviously, in 22, the market basically skyrocketed through really April and May that year. This year, the market has experienced an increase due to this level or this ratio increasing. But look at how much it increased in the spring home buying season in 22 compared to the last several years. And also the peak of 22 was around 102.5%. So homes on average selling about 2.5% over asking. But by the time we hit the end of that year, 22, it dipped to 98%. So 2% below asking. So a delta of about 4%. I imagine we'll probably see more or less kind of like this, just like we do every single year, and kind of end the year probably lower than the past several years. I'm curious about 22 though, if it'll get below 22's numbers. Of course, I'll keep you posted regarding the latest developments on that. With that said, please comment below with your thoughts regarding what you're seeing in your neck of the woods, because obviously this is really looking at the nation as a whole, and every market's different. So I'd love to hear your insights regarding what you are seeing in your neck of the woods. Also, if you guys are interested in learning about the Sacramento housing market, I have a separate YouTube channel called Sacramento Home Goals. I go over neighborhood tours, everything related to the Sacramento market, because I realize that on this channel, it's a national news channel, and a lot of you are not really interested in learning about the Sacramento market. In any case, thank you everyone for watching today's video. I really appreciate you. Have an amazing day, and we'll see you in the next video.